All right, Bulls and Bears. Hey, back with another dose of economic reality. As always, we have a lot of financial, economic news, analysis, and information to get caught up on here today. Let's go ahead and get right into it. We've got a warning from Bank of America, and this is something that I think most of us probably know because if you've been on this channel, you know the situation that the banks are in right now. You know what's happening with the dollar across the globe, the BRICS nations trading outside of the dollar, and that's only going to escalate as we get into 2024. But let me read you a quote here, and this is out of Forbes. Forbes, U.S. dollar death spiral. Crisis fears grow after Bank of America issues shocking $1 trillion every 100 days warning amid surge in alternative assets, gold taking off, other digital assets taking off. We've talked about the debt, and we're talking about the national debt, and this is how everything gets funded. This is how they're liquefying the banks, keeping the banks afloat, banks that actually are insolvent if you look at the amount of reserves they have. And remember, ever since 2020, the reserve requirement for the banks has been 0%. That's the first time that's happened in the history of the United States, right? So unprecedented, right? But we'll talk about that in a few minutes here. More over here on the Bank of America warning. Quote, the U.S. national debt rising by $1 trillion every 100 days. Michael Hartnett, chief strategist of Bank of America, wrote in a note to clients seen by CNBC, adding, quote, little wonder U.S. debt debasement trades closing in on all-time highs. He's talking about gold. He's talking about Bitcoin. Hartnett predicted the newly created ETF that have taken Wall Street by storm over the past month are on course for a blowout year. And I told you what was going to happen with that. I told you there's going to be a massive surge in alternative assets in Bitcoin. But I also expect more volatility. So we'll see a big spike upwards. I wouldn't be surprised to see it hit 100,000. But then the sell-off, I think, will be massive as the insiders dump at the top and leave a lot of the Main Street bag holders to weep, basically, is how it usually happens. And the same thing happens when stock markets crash. You see the insiders, the billionaires get out first. And that reminds me of something. Some people were asking if there was going to be a collapse, or they were asking if billionaires actually see a collapse coming. And we're talking about the ones that are selling a lot of their shares. We have Zuckerbucks out there, Bezos, the Walton family from Walmart. A lot of these billionaires selling off big portions, Jamie Dimon, big portions of their stock positions in their own company. So it's a red flag. And some people are asking, well, if they knew a crash was on the way, why wouldn't they just sell all of their stock? Well, here's what I think they'll do. And here's the reason why I think they didn't sell all their stock. They're holding still some of their stock. That way they can dump it before the crash, right? They don't want to be completely obvious by getting rid of all of their shares. If that were to happen, if any of these billionaires got rid of all of their shares, that type of dump in their stocks would set off major panic and contagion. So they did sell off enough to raise some eyebrows. I mean, when we look at the amount of stock that these insiders sold recently, it did raise some eyebrows, but it didn't cause massive panic. And of course, they didn't want that to happen. So I think they sold just enough to prevent a massive panic, but just enough to also, raise some eyebrows to what they're doing. But we knew that was happening all along, and really no surprise to a lot of people. But I think they're going to dump a lot of their stock before the big drop happens. I still think it's going to be this year, and I know people have been saying that for years. I try not to put timelines on things. I've probably the only channel out there that predicted the housing bubble was going to stay inflated because of all the money creation. This year, got a lot of things coming together, and actually this month is going to be a big one with March 11th and the expiration of the Bank Term Funding Program, right? We see, banks fighting against other things as well. We have this reserve requirement, the Basel III requirements, threatening the banks to basically change the reserve requirement from 0, which it's been since 2020, unprecedented. That's never happened before, but it's happening now. It's been happening now for over 3 years. That is going to be changed up to 20%. Now, banks are really fighting tooth and nail against that because they know, most of the banks, anyways, know that they do not have that type of cash available to have that type of reserve requirement. Now, I heard that it's going to be 16%, and I heard there's going to be other um, changes. Who knows? They could drop it. They could drop it to 10%, 3%, maybe even 1%. Even 1% may be difficult for some of these banks that have been relying on the 0% reserve requirement now for several years. And we saw Powell talk about that just the other day in front of Congress. Um, some of the people, some of the Congress people were drilling Powell on that reserve requirement, right? Anyone in power right now, they do not want that to happen. Anyone that doesn't want to lose their job, anyways, they don't want that to happen. They don't want the banks to have to come up with all this money and risk a bank collapse. So of course they held his feet to the fire, and they're urging him, not to allow any new big changes or regulations to come forward, especially that reserve requirement. All right, so big things happening, folks. What I would say, and we're going to get into some other news here in a bit, what I would say is be ready for something big this year. And I usually don't talk like this. If you've been on this channel, you know that I've been saying they're going to inflate the bubble, inflate the bubble, inflate the bubble, rescue programs, liquidity injections, right? Things could change massively this year if any of these things come to fruition. I'm not saying they're going to come to fruition, but at least now there is a risk, and there's at least talks of some of these things changing with the expiration of the funding program, with the Basel III reserve requirements possibly coming into play this year. Again, possible, not baked into the cake, but the risk, to me, it looks like the risk is increasing. Right? So just what I'm saying is be ready for anything. I'm not predicting any dates or anything like that, but be ready for something massive, okay? Um, Reuters, U.S. regulators expect to significantly reduce Basel capital burden, right? So they came out and they talked about maybe 20% that the banks have to hold of all the funds that are deposited. That means they can loan out less because they have to hold more. And you know what the key is to keep this economy rolling is more lending, more issuance of debt, aka credit debt, when people spend it. That's the key to keeping the economy going, with consumers, being about 70% of the U.S. economy, right? A couple other news items here. New York Community Bank said it lost 7% of its deposits in the past month. It slashed its dividend to 1 cent. So now people holding their stock get a 1%, 1 cent share dividend payout every quarter. Insane, folks. Here's one. Applebee's looking to combine with IHOP. This is ridiculous. Applebee's parent company wants to have joint restaurants for U.S. market and combine IHOP and Applebee's in one location at several different locations, but 2 in 1 basically, which I think is pretty ridiculous. Have you ever been eating maybe at Applebee's and wanted some pancakes? I don't understand the point behind it, but anyway, they're looking to possibly have those two restaurants together for some strange reason. I think when they learn the sad state of the U.S. economy and the sad state of the U.S. consumer, they're going to probably wish they didn't waste the manpower in combining those locations there. Here's one. Several truck companies plan on completely eliminating the use of human drivers this year. Folks, this is scary. I mean, the companies are facing such a strong demand to pay higher wages with all the strikes going on. Companies are really looking to eliminate people. That's why you saw the big emergence of the AI news this year, and the big push to AI, and companies looking to get rid of humans because of the cost of living. People are striking, and now there's more pressure for companies to do this. 3 startup firms have announced plans to eliminate all human drivers and replace them with driverless trucks through Texas highways by the end of 2024. So it's going to start in Texas. So anyways, pretty scary. Think about a big rig going down the highway, and just like you have a glitch on your computer, maybe your Windows starts going slowly, you have to restart it. Imagine that same type of glitch with the computer system that's running these big rigs, folks. That's scary, but this is what the high cost of living is pushing companies to do, right? If companies weren't faced with the task of having to pay people to keep up with the cost of living, you wouldn't see this badly. Of course, companies always want to make a profit, but to this level, we're seeing this big urge in AI and humanless vehicles and humanless basically transactions. Um, House passes spending package to keep the government open, includes $13 billion in earmarks. See, that's the thing, folks. There's been talks of government shutdowns. Even the recent one I said probably wasn't going to amount to anything because no one in power wants the government to shut down, and they probably will not allow the government to shut down. So what do? They pass emergency spending packages. And I'm afraid the same thing is going to happen with the banks. Am I 100% sure? No, nobody is. That's why I say be prepared, be ready for something big to drop. But I would not be surprised at all if they came out with trillions of dollars at the click of a button um, pumped into the banks, right? Folks, this is the insanity that we're in right now. We don't know what to prepare for. We don't know when it's going to happen. They could keep this thing going all the way into hyperinflation. The longer they keep this thing propped up, the worse the inflation is going to get. And historically, we've seen when the cost of living gets out of hand, we have a correction. We have some sort of downturn in the economy, and it's not good because people lose their jobs. But at the same time, it's a necessary thing to occur to correct the imbalances in the economy, the imbalances with the cost of everything. That's why they call it a correction, right? They don't call an economic downturn a mistake. They call it a correction. Markets get too high, the cost of living becomes too high, housing becomes too high, then ultimately there's a correction. Well, they've been doing everything in their power to kick the can down the road to prevent the correction. So what's going to happen this year with all the stuff going on, folks? The Basel requirements, the emergency funding program. You let me know down below. Are you preparing? Do you see risks high like I do? I see the risk high. I'm not saying this or that's going to happen, but I'm saying the risk is elevated and you need to prepare. Just pretend you're driving at 2 a.m. The bars just closed, and a lot of drunks are going to be on the road. Are you guaranteed to get crashed into by a drunk? No, there's no guarantee of that, but your risk is a lot higher when you're driving around just after the bar is closed, right? So that's all I'm saying, folks, for the support. Keep stacking. Be ready for anything. What do you think about all this, folks? Please let me know down below. Thanks, everybody, for being here, and we'll talk very soon. Keep stacking. Bye for now. Peace.